All right, so this is week 4, Outlook number 1 of 2. Happy Martin Luther King Day if you celebrate it in America. I'm not sure if it's celebrated all over the world, but let's go ahead and get into it. So, starting off with 6B1, we essentially are still inside of the macro price leg and also, I guess, essentially initial stages of this bearish run. We've actually decided to stagger trending lower here in the very short term immediate. So looking at it from the 4 hour time frame, I don't know if I explained it in the previous, but I was saying that I would like to see this liquidity draw happen and then for price to continue higher, looking for opportunities inside of this price gap. Price decided to forego that and then perform a liquidity draw of the previous liquidity draw, and then I had opportunity here, got the initial run up. I actually decided to collapse it once it got here based off of the response from this price gap, this area of interest here, and that decided to check again, another draw on liquidity. So we had another liquidity draw, and essentially, I don't know if I explained it too well, if unless it was like on just a private meeting or whatever, but I said when price looks very efficient, I guess from here moving up to where it is now, everything looks efficient. The only logical thing for price to do if it is going to try to continue higher is generate liquidity by moving lower. And so that action that it does is going to be performing liquidity draws. And because the liquidity pools that it's drawing from are not large enough to sustain price action moving higher, it's going to continually fall back until we reach one that gives it enough oomph or enough bounce in order to push it to where it's going to go. So also notice that the first liquidity draw, it went just slightly into the discounted side of this price leg, and then it ran it yet again, and then it ran it yet again. So not necessarily that it's important, but we have, essentially 3 rejections, and it's also qualitatively giving us giving this significance to showing that this is definitely the discount side of this price leg, and there is a lot of buy interest inside of this inside of this discount side of the price leg. So anytime price dives deeper, the logical next steps would be to expect a larger displacement from the discount side if there is a liquidity draw. And so as of right now, you can see that where we had a liquidity draw that went a little bit deeper into the discount side of the price leg. I wouldn't consider anything over here as an area of interest. Why? Because everything is balanced, everything is touching. If I was to look for anything, I would have looked for, these lows as liquidity points for liquidity draws, for actions of, for liquidity draws. And so that's what I would be seeing here. And currently, right now, we're seeing a liquidity draw yet again, and then we have a very nice bullish displacement higher. So we're just going to essentially sit on the sidelines and wait and see what price does from here. I'm probably going to just sit on the sidelines until price dives deeper into the discount side if it does, or until we just reach the area of interest that we've been waiting on for months now. A little jaded at this point from the price action on GU, but it does make sense. There's a lot of stuff going on, and this is just the price action that's being presented. So yeah, just being patient. All right, moving on to gold. Gold is steady, moving higher, steady moving up, moving up, moving up. So from the macro perspective, all we have done, excuse the blue lines, those are just contract change lines, for futures trading. But as we continue moving higher, all we did was reach inside of this consolidatory region or consolidation area, and we gave a lot of consolidation over the past few days last week, and then decided, I think it was Friday, or if not Friday, actually, why am I second guessing? I have the time frames right in front of me. Yeah, so I think it was Friday actually though. Yeah, so it was Friday. Price decided to break lower out of this consolidation range. And what actually ended up happening, if you've seen it at the time, all price did was pull back into this area of interest here. That was a little bit lower than the one selected here. And this was a valid area of interest. But the problem is we are in consolidation. And so, two things here. The first thing is that we had a liquidity draw from this liquidity point here that led to the creation of the next high, right? Which was right here. And then the second thing that happened was after this liquidity draw and run, we had a liquidity draw of the high that led to a push lower. And so now because we had liquidity draw and then on one side, liquidity draw on the other side, and this liquidity draw dove lower but failed to take out this low, this is unwillingness, and it also is basically mitigation of this area of interest, which mitigated, this area of interest here. And then we had a pullback. Well, if expecting continuation based off of this price action, I was expecting price to mitigate this area of interest and then move higher. But instead, we got liquidity draw, unwillingness plus an action plus the action of mitigation. Then we had action and mitigation of this price gap that was generated from this liquidity draw, and that led us to move lower. And that is what led to this very, very overextended draw on liquidity here. That was also a combination of action mitigation of this price gap or this area of interest here on the 4-hour time frame. And so that is what led to the run here and the gap that happened today. So all of this logically, it makes sense. All we had was essentially TLDR, a coiling up of liquidity, a large draw on that liquidity into an area of interest, which was even a deeper liquidity pool. And then we had a run higher to continue the current price action, to continue the bullish run. That's all that happened. Now, if this had been a sustained break of this low here, I would not have considered this as an area of interest for entry. I would have been very conservative if it was, because if this was a sustained break here, then this would have been a break of structure, and then I would have started looking for a price to pull back into something lower, because this would have been the actual price leg essentially. So yeah, so as of right now, still same thing. We're just looking for continuation plays on gold. We've created another all-time high. We closed just slightly below the all-time high on gold yet again. So either we're about to go into another consolidation period, or we're going to pull back, or we're just going to sit on the sidelines and let price action develop. No need to extrapolate too far. All right, now on the NASDAQ, I broke down how I viewed this area, this messy price action before in a previous outlook. I think it was a supplemental outlook for week 3. And I identified this liquidity draw an area of interest that I was expecting price to run from. And it has decided, as you can see, to say, F that, we're going to do our own thing. It did give a slight respect of this mitigation of this area of interest, but as you can see, that clearly failed. So, what ended up happening? Well, we ended up gapping down and deciding to not only run this low, but run this low, which was pointed out, I believe, as well. If I didn't point it out in the supplemental outlook, I pointed it out in a private call. But this low, I said I wanted to see what happens here. This liquidity draw, I was expecting for price to mitigate that, but the counter was, if we do go lower, I want to see if this low holds. If this low holds as a liquidity draw, which it seems to be the case as of right now, as it stands, then I would see price moving higher for sure. If this low breaks, then I definitely see price moving lower. And I would still be very skeptical if we pull back into, anything over here. I mean, technically, I could see this as an area of interest that we pull back into here, but because of the sustained deflection of price moving higher, the sustained resistance, it's really hard for me to say that if we pull back here, this will be strong enough to hold price moving higher. I would really like to see this be the liquidity draw that presses price higher, because if we start moving lower, I don't know how strong this price gap will be because of all the liquidity that was mitigated from here in this liquidity pool, and essentially there's nothing lower to support price other than potential draws on these liquidity points on these lows here. And so if it does that, it's just going to complicate or just make the price action more messy. So I'm kind of hoping that this will hold, this liquidity draw right here will hold moving into the next trading day and into the week, and we actually get price to push higher. If not, this is definitely valid because this is on the discount side of the price leg, but based off of the price action and reading it um, from top down, I'm not sure how powerful that this area of interest is going to be in regards to looking for opportunities for buys. So that's what I'm seeing on NASDAQ. Now, a new pair. We've added silver. We've swapped silver and S&P 500. Now, I'm not going to say I've looked at this yet, so it's on here. So I'm just qualitatively or just on the sidelines watching the price action happen. But it's just added to look and see if there's how smooth the price action is, if I like the characteristics of the pair and stuff like that. I haven't really back tested or looked at it too crazily, but because it's a big thing right now, I'm gonna keep it on my watch list and see how things go. All right, on to the Dow Jones. So similar to the Nasdaq, we gapped down. I was expecting price to mitigate this 4-hour area of interest and specifically mitigate something inside of this wick in order to press price higher. Um, I looked at this last week, saw this was a liquidity draw, and ended up mitigating um, an execution point inside of here, which was a 5-minute price gap, and decided to press higher, but we had unwillingness, and that led to the price action pushing lower. And then, not only did we press lower, but it seems currently that we have performed a very subtle draw on liquidity of this low here. So the price action right now is a little interesting. It looks like it's trying to create a trap, colloquially speaking. I would like to see continuation of price action moving higher, but based off of the double draw on liquidity here, I'm a little skeptical of how this is going to play out. I have this area right here marked up because there is a 5-minute sponsored candle here, but this sponsored candle is a very extreme point because there's no, if I look down on the lower time frames, there's not really action and mitigation that happens over here. So this would just be really a very risky shot in the dark kind of play if it does mitigate it. Other than that, this would just be a liquidity draw of a previous liquidity draw because of this unwillingness. And so if this is sustained, similar to how I was saying on the NASDAQ, I would like to see price hold this level of support really and continue pressing higher. But if it doesn't, well, then there's not really much to sustain this. I don't really see this 5-minute candle for execution to be strong enough to hold up or to resist or to support what's happening here, this price action. Sorry, to resist the price action, the bearish price action, and I could see price definitely moving lower if it does, if this liquidity draw does not hold. So as of right now, to give this a little better. Oh, oh dang. All right, whatever. No, I'm going to do this. LD. I don't know why that didn't show up. All right, so yeah, we'll see the liquidity draw as it stands. This is what's happening right now. This area right here that's marked up is just a 5-minute random sponsored candle. Doesn't really have the action mitigation supporting it. So if it hits, it hits. But if it doesn't, I know based off of my rules why it failed. So I'm more inclined to play off the liquidity draw rather than the 5-minute sponsored candle, but it is marked up just for documentation purposes to see if it holds. And the counter narrative is that if this does not hold, this breaks and this moves lower into a deeper area once, because this price leg will now be completely defined. Where we have currently our structural point, we have a liquidity point, which is just the high, but we have yet to have a break of structure to solidify this liquidity point and that breaker structure will come not only from breaker structure of this low, but breaker structure of this low, and then we'll have our uh, discount and premium array here. All right, so that is it for week 4 outlook number 1. Peace.